Today we're going to talk about Starbucks. We're going to go into all about their stock, the technicals of it, the finances. It's been in the news a little bit lately because of striking, and I'm not really going to get into the political side of it, but employees want to strike because they don't agree with policies. So, which is actually surprising because Starbucks is a pretty liberal company, but anyways, we're not going to talk about that. Let's talk about Starbucks' finances. So, looking at the chart here, the market is currently closed. It's now trading under $9 a share, sitting at 98 bucks. And let's find out what we're looking at here. So, we'll throw this moving average on. It's a 200-day moving average. We can see that it's actually just starting to crack it, which is a good sign that it is possibly going from bullish to bearish. So I would look at this here. We're going to talk about just technicals now, and then we'll jump into the financials after. Looking at the technicals here, you can see that it's in a very important area, right around this. Well, I guess it's a little bit below. Here's $100, but between $100 and $96 is kind of where it's finding support. You can see this daily candle closed into the area and is rejecting a little bit. There's some wicks here. If you wanted to make an even cleaner zone, you could do that like right here. So there should be buyer support here, but I mean, it is crossing over the daily moving average. So usually this provides a level of support. However, if it breaks it, it'll then retest it, which it might do next week when the market's open. And then we'll see if it breaks this area. I would say it is headed down to at least the next level. Would be something around here, around the $84 mark. And then we would go from there. But I kind of have mixed emotions about Starbucks. Like I like coffee as much as anyone else. Honestly, Starbucks is like Jack Daniels in the morning. And I don't really like the culture that's come with Starbucks. You know, I'm not really a fan of $9 lattes. I like pretty simple coffee. But Starbucks is massive, and because they have a lot of locations, they can suffer tremendously during a recession because they are over leveraged. There's Starbucks everywhere. They're in every chapters. They're all over the place. So with more locations comes more overhead, comes more potential to lose money. So let's dive into the financials here. Now that we got the basic technicals out of the way. So their market cap right now is $112 billion. Their PE ratio, so they are profitable, which is nice. It's at 32 though, so anything over 15 is considered overpriced, and I guess that is subjective. It depends on the industry. It depends on how investors feel about it. I know tech, they'll pay a lot higher than like bank stocks, this and that. But generally, like the S&P 500, anything above 15 on PE ratio is considered overpriced. So I would say Starbucks is overpriced just based on that. But it does pay dividends, which is nice. Not a lot, but a little bit. And it is a profitable company. So right now it's $112 billion. And let's see what they got for assets first. They got just shy of $28 billion in assets. So based on that, they're already trading at 4x of their assets. Their revenue is on pace to be above what last year's was. And they're since 2020, their revenue is going up, so that's good, but so is their costs per goods sold. And their profitability, they're supposed to be a little bit more profitable than they were last year, but not much. If we look at it quarterly, revenue is up quarter after quarter, which is good. These last quarters were all pretty steady for income, so no real red flags there. the majority of their revenue is North America. I'm sure we're all aware of that. So with all that being said, I mean, you can look, see 400,000 employees. That is a lot. Those, there might be some layoffs in the future. I think Starbucks stock right now is an okay buy. I like that it pays dividends. $112 billion market cap. So they're trading at just over three, about 3.5 annual revenue, so that's not crazy. But I think the real world outlook of Starbucks is that if we go into recessive times, $9 lattes are not really going to be as popular, even though there are white girls that love them. The pumpkin spice come October. I don't think Starbucks, I don't think the company's going anywhere, but I don't think they're going to be on the incline, at least for the next few years. We will see if it breaks this zone here. This is a strong zone here. This is the weekly here. So if this, it's tapped 3 times, and usually when price hits 3 times or multiple times, the more times it hits a zone, the more likely it is to disrespect it. So we can see it's struggling here, and there's a very good chance that it busts down. So I would wait for that. If you're looking for a trade setup, I would probably play off these recent daily wicks. So around the 102 area. If the price comes back up to here, then I would look at shorting it back down, at least to here. And then I would target this lower zone. So that's one possible trade setup. Or if price just completely breaks this zone right here, let's say, price comes down here, busts this, and then retests. Back in this zone and wicks, I would also do that. So I would say the second scenario is better risk to reward, because obviously if it fully breaks the zone and then retouches it, it's showing a better sign that it's going to break down lower. However, if this just rejects now, comes back up to this zone, we don't know. It might just go back. It might basically just be respecting this moving average and be headed back up to this area here, the 114, 115 area. So playing it safe, I would wait for either this to come up to here, reject, target down, or this to already break this big zone here, retest this zone, and then come back down. So hopefully that makes sense. Thanks for watching.